Here's a quick recap of the Lakeview Precision Roof and Solar Project. Mercury Plastics is a TMA member. They've done 5 different projects with us. The main reason is they needed a roof at those locations and really didn't want to write a check for it. And they wanted to capture whatever incentives they could to offset the cost of the roof. And even though they like the benefit of being green, they actually did it more for the financial reasons. So the roof and solar funded price 1.9 million minus almost 1.8 million worth of incentives. Net funded project cost was 119,000 and they saved 73,000 per year, and the project under the cumulative cash flow never went negative even while they were making those payments. Because of our track record, we've been around a while. We've got several different options to fund the project, including 100% funded by the power company. The big tax incentive that's available that Trump is cutting, most of the country's a 30% tax credit on the roof and solar, but our area here in Chicagoland has been designated an energy community, which gives an extra 10%. So that tax credit applies to new roof, switchgear, solar, and EV chargers. So if you wanted to add any of those things to it, you can definitely do that. And there's still time to lock in these incentives. And a 40% tax credit on an asset is the largest ever in U.S. history. And we're also able to combine that tax credit with 100% depreciation in year one. So incentives this high might not ever be seen again. Most states don't offer any additional incentives or from the power company, but Illinois does. It has a program called Solar Renewable Energy Credits, or SRECs, and they pay you for having the system up and running for 15 years, and they pay you every quarter for 7 years for that incentive. And the power company has an inverter rebate that they put towards the project, but they're not really being generous. This is money they charge on everyone's bill. And unless you do a project, you never see that money again. We use Bloomberg certified equipment. So tier 1 means they research the company and test the equipment. And these panels have a 30-year warranty that includes the production number for a full 30 years. Campcraft did a project with us and they're happy with the whole project. One problem was they did the roof 1 year prior to doing solar and they didn't combine it as one project. So they lost 40% of the cost of that expensive commercial roof. They didn't get that back because it wasn't one project. So here's your system, Lakeview Screw. They have 228 panels and 2 inverters, and that we pretty much maxed out the roof on there. And these panels do not penetrate your brand new roof. It's a weighted ballasted system. So what the roofer said the process is, and he'll talk with you guys more in detail separately, but they remove all the rock ballast off the roof. They clean everything properly and they put down a brand new white TPO membrane, 60 mil membrane. And what we do is with the system, we use a piece of their roofing material that goes down. We call them slip sheets. That goes down, then a rubber pad, and then all the equipment. So there's no holes in your brand new roof. And then we tie in to where your meter is, sometimes going down the outside of the building so there's no additional holes. And they install what's called a net meter. And so when it's 4th of July and you're generating energy, but you're closed and not using it, it gets measured and stored on the grid as a credit, a 1-for-1 credit for your account number. So that's how, and you will be producing more in the summer versus the winter, but that's how it averages out. And we're showing that we're able to offset 42% of your energy use. We couldn't do more because we ran out of space on your roof. So that system size is 169 kilowatt system, where the panel production warranty is 30 years. So this 206,676 kilowatt hours, that's the number we're guaranteeing for a full 30 years. And then based on the savings amount, based on producing this number, we're actually saving $20,668 per year based on that what you're currently paying. And if you plug in this 206,000 kilowatt hours per year into the EPA website, it shows us this 147 CO2 metric tons of greenhouse gas emissions are reduced per year. The green section in the middle shows how we calculated the savings. The roof project cost was $110,916, and we've worked with Roof ROI on quite a few projects. They're very familiar with solar and doing that, and their warranty is intact for the full 20 years with solar being on there. The inverter rebate, we guarantee that, and we deduct it off the cost of the project. So the net project cost cash is $450. If you use the 7-year funding option that we have, it does cost a little bit more, but what makes this different is that additional cost they use to charge to use their money qualifies as part of the project cost, which normal financing wouldn't do that. So what that means is because it's now the project cost, you get 40% of that back in the tax credit, and you get to use the depreciation that was 60%, now it's 100%. You get to use that larger number for the depreciation. And then the state of Illinois SREC, they're paying $181,000 back to you guys for doing the project. So over here to the right, roof and solar funded 646,000 minus 473,000 in incentives. And then the amount not covered by incentives is 172,000, but then you save 20,000 per year. And we showed two different cash flows to do a normal ROI, return on investment, for the project. You pay the full 450 in year one. We have a 3% accelerated increase in energy costs. And just recently they went up like 25%. So, but on average over the years, they say 3% is historically what they go up. You'll get 24,000, almost 25,000 from the state program for that year. You get the tax credit in year one. You can go back and amend returns to apply these credits. You can go back 3 years and do that. So if you paid taxes in the past 3 years, you can get that money back right away, and they're easily transferable. Then you get the bonus depreciation over most of it in year one, but you can depreciate it over those 6 years. So the project pretty much is negative 65,000 in year one, but the beginning of year two, you're positive. So a 1-year ROI on a roof when a normal roof has no ROI at all. Now, the one on the right here, this 92,000, that's how much you pay in a year. So those payments would start at around 7,600 or so per month, would be right on your bill. You'd save 20,000 that year, and you get another 25,000 almost in SREC money. Because the funding is added to the incentive, if you look at the federal tax credit, went from 172 all the way up to 231. So you get more money back on that. And then with the depreciation, the project's actually positive 351,000 in year one. And as you're making those payments, it slowly, goes down. But in year 7, when you've made your final payment, you're still positive $128,000. So to do the project without solar, the number on the right, you pay for the roof, miss out on all the savings, it's going to be negative $1 million versus doing it with the incentives and getting the project, it's positive 889,000. So that's a pretty big swing. We've done projects with Manor Tool, Camcraft, Rockford Ball Screw, Brico Machine, Donson Machine, High Deck, Mercury Plastic, Chicago Boiler, and we've got proposals with quite a few other TMA members. And feel free to reach out to them and ask their experience. The main problem here that delays the project from getting rolling is the ComEd interconnection agreement approval. They used to take 6 to maybe 10 weeks to get these approvals, but because they're getting a lot of applications, we've got one that's right around 14 weeks right now. without an approval. So that sets us back for a while, and we can't apply for the the SREC incentives or any of that stuff or order materials until we get that interconnection approval. So that's what causes the delay in getting, pre-construction 25 to 26 weeks. The roofers can get to work right away. They can get that done. And as they're doing that, we'll get everything teed up. And we don't delay. We really go as fast as possible. But sometimes because we're dealing with, the government and permits and things, it just takes a little while longer. So here's a customer, Kloss Distributing. They had an expensive roof and, solar project together, and they decided to use the power company funding. And it's about a year and a half later, and he gave me a little testimonial.
About a year and a half later, we can say never paid a dime for anything. Got over $2 million worth of solar equipment on the roof, and we're going great. Jim and his team at Revenue Task Force did a great job finding money everywhere between incentives and grants and rebates, tapping into federal money, state money. The energy companies are offering an incentive. So it was really, really a great program. Really happy with what we did here.
Thank you very much for watching the recap. We'd be happy to meet in person or, meet over Zoom to try to explain, and answer any other questions you might have. Have a great day. Thanks.